Greetings, teams. I trust that each and every one of you are doing well. I believe that many in our team, right, especially if you are part of JD Wealth Maker, and you're also part of JD Export, you might be basically wondering, right, that I have not really updated regarding the market situation at this moment. The reason being is that I am basically right looking into a few conditions of the market, and I want to wait for that conditions to meet before I actually release or share my thoughts, what I really think market is going to really play out. Now I have something that is one of my favorite concept, or one of my favorite theory, right, that I want to look into, and I want to explain to you why this theory, or why this method, or this model is currently playing out. Okay, and if you look into the chart that I have here, right, this is basically Bitcoin on the daily time frame. These are very, very important cycle. Okay, and you know that I am really interested with the cycle, especially looking into the macro perspective of the market, because then I understand. I don't want to look into the lagging indicators. I want to be able to look into the leading indicators, or the leading macro perspective, so that I understand exactly what is coming next, right? And this is going to be a very, very significant insight to every one of us. So I want to be able to help you to understand how am I actually looking into the market, and what is the model, or what is the theory behind and behind the justification why I think this is how the market is going to play out. Now, please understand, all right? I am not saying that I am right. It's just that maybe my perspective, or the way I look into the market is different, and you can see that we are hearing a lot of different a lot of different theory, a lot of different perspective from different influencer. And you can also see there is a lot of different influencer using different technical analysis, and some are even using Elliott wave theories and so on, right? And today I want to show to you exactly what is the theory that I am actually monitoring, right? When I look into the macro perspective, where the market is moving, I am really excited and interested to see the cycle where the market is actually moving. And most importantly, all right, please understand, guys, that if you look into this dotted red line, right, this dotted red line is basically where the halving was. And if you look into somewhere around $45,000, this is where we actually had the institutions, right? We have the Bitcoin's spot ETF, and this is the where you start to see the price starts to move uptrend. So that simply means, right, from sometimes during this period, we already have the ETF players coming on board. So that simply means that Bitcoin is basically an institutionalized game. All right, and because of that, you must understand that institutions are basically referred as a smart money. So you must understand there are theory, there are method, or there are perspective that you can actually use to understand the institution, how the institutions are basically playing the games, or what they are actually trying to do in order to woo everyone at this moment, right? If you look at what is happening here, we have been seeing quite a lengthy distribution phase, okay, over here, and many are thinking, or many probably have a thought that we have not really hit the all-time high. All right, and this is something that I want to debunk. This is something that I want to also explain. Are we really already actually hit the all-time high, and are we basically going down from here? All right, so this is another important aspect that we need to understand, or else if you look into, right, probably 99% of the population that are involved into crypto, or especially those who are holding Bitcoin, okay, especially the retails, all right, they are basically being bombarded and being programmed every day that Bitcoin have not yet reached all-time high, and there is another leg up where Bitcoin is going to hit probably 90,000 or 100,000, right? So you can imagine, right? 90% of the crypto, right? Crypto space, okay? The people involved here are basically anticipating for price to go up. So at this time, okay, a lot of these newbies or even retails, okay, are coming into, and they are most probably, right, from my perspective, it may not be the right time to actually jump on board at this moment, because this could be how the smart money is playing the market in order to get everyone in, you know, so that they can hype everything around, and then they're going to dump everything. All right, now I'm going to help you to understand, to look into this theory, and I want to help you to be able to decipher, so that you know you can basically probably, all right, have another perspective of the market. So yes, we have a lot of different concept, a lot of different perspective from different, you know, influencer and so on. That is really awesome, but it is also good to look into another perspective here from my point of view, right? My perspective and how I'm actually seeing the market itself. All right, now to do that, okay, I'm going to quickly bring you to a very important theory here, which is called a Wyckoff theory. Now Wyckoff theory basically, all right, help us to understand the accumulation and the distribution space. Okay, these are basically a very important insight. But before that, okay, I will put this link later on, all right, in the description, so that you can read the detail. But let's just quickly look into what is this Wyckoff, Wyckoff trading methodology all about. And this Wyckoff currently, right, if you look into it previously, most probably there's been used in the stock market, in the forex trading, because these are where the institutions are trading. But the moment Bitcoin actually became is listed as a spot ETF, that simply means that Wyckoff is also playing a significant role, all right, in understanding the trend, because now we have the institution money, or we call this as a smart money, playing this game. All right, now please understand that Wyckoff basically, okay, it is not a new tool. This tool has been tested. It has been around for many years, since 1930s. It was basically introduced by a legendary influencer by the name of Richard Wyckoff. Okay, so he's the one introduced this into the market, and they've been trying this method for many different, asset classes and so on, and that has been working very well. So it is not something that is new. It has been proven. This theory has been proven, right? So this is important. Now the important thing I want you to understand is that these are, if you look into the theory itself, okay, Wyckoff theory is set of rules that allow trader to understand institutional players. This is the key things here. All right, now please understand, if you want to be successful in understanding, you know, the trend of the market, the direction of the market, you know, then you need to understand how the institution is playing this game. So now, as I mentioned to you, right, since the spot ETF, Bitcoin is no longer driven by the retails. It is now driven by the institution. All right, so therefore you need to understand how the institution's mindset and how the institution is going to play this game. Okay, so it allows the trader to see the footprint of smart money and to trade on the same side as those with the most influence over the market. So now, can you understand, right? This is so significant, because if you understand the footprint of the smart money and you know exactly how the institutions are basically deciphering or moving the market, then you can be on the winning side. That is the most important thing, right? We want to be on the winning side. Now, also please understand the institutions are basically are grabbing the liquidity. So this is why, if you understand the Wyckoff theory, and later on I'm going to align and help you to understand in terms of the liquidation. Is the liquidation more on the long, or is it more on the short? Let's look into it, okay? Because then you will understand how does this Wyckoff theory, all right, when we apply it into the current Bitcoin sentiment, is this really applicable? Is this really gel in with the liquidation data itself? Then you will understand how the institutions are basically playing this game, right? So this is going to be really exciting, because this is one of my favorite, okay, one of my favorite theory, one of my favorite theory that I've been using basically in understanding the cycle of the market. So if you are someone who is trading based on cycle, right, it is always good to have this macro perspective about the market itself, okay, from a cycle perspective. Then you will be part of a leading, right, a leading leading together with the institution rather than lagging behind, and you don't know what is coming your way. And that is the reason why a lot of losers, okay, 90 probably 90 over percent of traders are loser, because they are just following the lagging indicators, because they don't know or they don't have this insight into those leading indicators. Okay, so this is important. Now, when you understand the leading indicators and when you know how the institution is playing the game, you will be in control. Okay, instead of you being controlled by the market, now you're in control, because roughly, right, you have the whole footprint, you have the roadmap not before you, because you know exactly what is coming next. All right, so these are important, futuristic information, right? Or we call this as a prophetic information into the market. So you have an oversight, oversight into the market even before things happen. Okay, so this is going to be quite significant, right? Now, if we just move, okay, if you just go and read all these things, you will be able to understand how does all these things works, right? Now, I don't want to go into it, but I want to touch a few important things, and then I want to show you the theory itself, the schematic, all right? The schematic and how it works, okay? So that will be quite significant. Now, if you look into the law, okay, now this is important, okay, because there will be always an effect based on the cost, right? So there is what we call a law of cause and effect, and that is what is Wyckoff theory all about. And here we have the accumulation and the distribution phases. Okay, now please understand that the cost is usually constructed by a change of hands from uninformed to informed smart money. It starts during period of sideways movement, and when the market is ranging. Chart shows this when we have a small ranges or low volatility period. I will explain to you this later on, but I will just want you to understand we have this accumulation, this phase, okay, this phase where you can see, right, how smart, okay, because the money starts to move, okay, you can see that the market begin to move, because from those who are uninformed to informed. These are smart money. These are the institution. They have information ahead of time, because they are following a leading indicator and they know exactly the behavior and where they are moving the market. And because of that, they are the winners, right? So if we can do the same thing, and if we can become an informed, right? We can become an informed traders or informed retailers, then we will be part of the smart money too. Now, the longer this process continues, the larger the expected resulting move effect is. After a period of consolidation, which are the small ranges, there is an expansion or explosion move in price. This is called what we call a markup. Okay, I will show you exactly what I meant here. Now, Wyckoff called these small ranges as the accumulation phase, which is the cause, which could cause the price to rise, okay, effect, and form an uptrend bullish, or a distribution phase, which is the cause, which can actually cause the price to decrease. Okay, now let's look into this law, okay, very quickly, and then I want to show you exactly. Okay, so if you look into the cycle, right, so this is important. So in this cycle, right, we have the four phases. We have the accumulation phase, which is usually presented as ranges. The accumulation phase represent area where large players accumulate their position to go long before the market uncovers its direction to other traders. And once they have already accumulated, the next phase will be the markup. So this is where you will start to see the price starts to move, okay, on a bullish trend. It starts to go up, and thereafter the smart money will start to take the profit. So this is where we have the distribution phase. Once the price reaches the desired level, the large player begin to sell or they take their profit. And then you have the markdown when the price actually comes down. So these are the four phases when you talk about the Wyckoff theory itself. Okay, so if you look into this, right, you can see over here, this is a very important tool, right? If you can, let me just make these things a bit bigger, so that you can see how this is going to play out. Right now, this is just exciting, right? To be able to understand what is happening here, right? So you can see over here, right? So we have this accumulation area. This is where the market begin to move sideways. And basically the smart money knows, okay, the smart money knows that the price has already bottomed, and this accumulation phase sometimes can take a long time. And thereafter you see the markup. This is where we have the bullish, okay, the price begin to increase, all right, and as the price begin to increase, you will start to see a lot of buyers will begin to come in, and this is where the FOMO start to take place. Can you see that? So thereafter we have the sideways consolidation, or we call this as a distribution. Can you see that? This consolidation is an accumulation, and this is basically a distribution. And once the distribution, during the phase of the distribution, what does the smart money do? What does the institution do? The institution will start to sell. This is where they will manipulate. Alright, they will manipulate. You will start to see the price will range up and down, up and down, up and down. And this is where they are creating a sense that, you know, that the price still going to go up. But on the other hand, we are now looking into the markdown. This is where so many retails or so many individuals, okay, misunderstood and think that this is where the bull run is starting, and they start to actually purchase their Bitcoin or their crypto assets over here, not knowing that the smart money is leaving the market, and thereafter you start to see an overdue, right? A markdown, price starts to come down, and every one of them left disappointed because they came in at the wrong time. Because this is where the institutions, okay, begin to hype the price around. They hype the market. They create media starts to create a lot of stories. You know, price starts to begin to range high and low, high and low. Everyone is now, you know, becoming FOMOing in, okay, FOMOing in, and they think that, you know, this is the time. Then when the price starts to go down, they start to there's a FUD, right? There's a fear. There's uncertainty, there's a doubt. People don't know what to do because they thought that the price is going to go to 100,000, 250,000, not knowing that the smart money are not really interested with the price going to 100 or 200,000. The smart money are basically interested to take the profit. They actually buy low during the accumulation phase. They're going to sell at the distribution phase. Can you see that? So this is where the FUD begin to come in, and a lot of these retail start to sell. The more they sell, the price drop. The more they sell, the price drop, and the price keep dropping. Can you see that? So this is why so many retails and so many people who don't understand the cycle or the Wyckoff theory, they get stuck over here, and some of them are holding Bitcoin for 2 or 3 years and waiting for the next cycle. All right. Now this is a very, very important insight. Okay, I want you to understand. Now let's take this. Okay, let's take this and understand. Now the question is, where are we in this cycle? Are we now at the accumulation area, or are we at the distribution area? Now, this is going to be very, very important question for us to understand. So, if I bring you back, right? If I bring you back, and let's look into, okay, where we are now, okay, in terms of the, you know, cycle itself, right? Let me just show you this. This is going to be very, very critical to understand that, right? All right, sorry. So if we get back over here, right? If we get back to that same, you know, right? You can see this probably is playing out exactly, all right? Exactly. Can you see that? So now, if we look into this theory or this market cycle, right? Now you can tell me exactly where we are, right? Where we are now in terms of the Bitcoin price itself. Okay. Now I'm going to bring you into the trading view very, very quickly, because if you can identify, okay, accurately where we are now, then I believe that every one of you know exactly what is going to happen. All right. So if we get back into the trading view now, if you look, all right, if you look now, can you see exactly, right? Exactly what we are seeing over here. What we are seeing over here is actually playing out exactly as why we are now. Can you see that? So now, what we are seeing here now, a lot of the technical analysis will call this as a cup and handle. All right, they will call this as a cup and handle, and now they say this is basically, you know, the market is consolidating and they are saying that this is an accumulation phase and then the price is going to go up. Am I right? So that is basically the narrative that we are hearing from the market. But if you look into the Wyckoff theory, we are currently at the distribution phase, not at the accumulation phase. Can you see that? So if we are at the distribution phase, then what are we expecting? Are we expecting market to go up, or are we expecting market to actually come down? So are we expecting markup, or are we expecting markdown? So if you look over here, right, based on the Wyckoff, okay, I know I am not against any theory outsider, guys. This is just my perspective. But I can be wrong. Right? I can be wrong. All right, but this is just my perspective, adding into the sentiment of the market, or adding into the knowledge, into the market, so that everyone else who are basically listening or watching, to this YouTube channel, to this video, you will have another perspective. So instead of just, instead of you getting stuck with the technical analysis and the Elliott theories and all these things, right, you might have another theory here that you can actually compare, right, before you even decipher the market or make a decision to move forward, right? So that is going to be very, very critical. So this is what we have over here, right? So now, if you look exactly, right, if you look exactly over here, if we just look exactly over here, right, if I just go and maybe if I look into, let me just see if I can get the rectangle. So you can see over here, right? So this is basically, right, what we are seeing here, right? What we are seeing here is basically the accumulation phase. Can you see that? So this is the accumulation phase. So the smart money been accumulating because they know as the price comes down, they have been accumulating over here, right? And then over here, right, we have can you look into this phase? Okay, this is the longest ever phase of the distribution, okay, that is taking place over here. So this is the accumulation phase, and this is where we have the distribution phase. Let me just change this to a different color, all right, so that we can compare this, right? So this is going to be I think another important insight for our team, our community, and this is definitely going to add a lot of significant value. Now if you look over here, right, I have put a dotted so you can see, right, now this is a accumulation phase, and then we got the markup. So the price went up all the way, and now we have the distribution phase. Now if you look over here, right, we have the halving. Before the halving, we already had the all-time high, which is around 74,300, if I'm not mistaken, okay? And now the green dotted line here is basically the upcoming election, which is on the basically 6th of November, which is only around 13 days from now. So about 2 weeks, okay, we're going to have the election. So what do you really expect to see when the election is taking place after the halving? So please understand that there is a lot of hype going around at this stage over here, right? A lot of hype going around, and most probably, right, what we could really expect over here is that we could probably see a pump, right? We could probably see a manipulation or a pump, okay, going up all the way, all right, most probably, right, going up all the way. Let me just see if I can get a So we could probably see a manipulation pump, right? Let me just take this, okay? So we could probably, most likely, right, we could see market can actually come down over here before the election, and then just nearing the election, we could actually see a move uptrend. So we don't know whether this could be slightly higher than the previous all-time high, or it will be basically somewhere the all-time high, and then we could see market actually come down. Right? Market actually come down in this way, and then it can go up in this way, and then it can basically come to this level, and then it can go up, and then you can see comes down all the way here, it goes up, and then it comes down all the way here, and then it goes up and comes down all the way here, all right? And then we start to see the market begin to, all right, recover. All right, so this is another scenario that I can see if we follow the Wyckoff pattern. All right, if we follow the Wyckoff pattern. So at this moment we are not so sure, but looking into this distribution phase, okay, we could already start to see a lot of manipulation been taking place during this phase itself. All right, now if the market goes down, all right, we have a few target here. You can see that this, let me just remove this, all right? We can see that the first target is around 49 to 52,000. So this is the area where there is massive, all right, there are liquidity, all right, these are area. And if this doesn't hold, the major target next will be 38 to 45, all right? You can see that there is a lot of liquidity there, right? A lot of liquidity there. And thereafter, we have the critical target 24 to 32. And then we have the bottom around 15 to 17. And normally, okay, normally if it hit 15, it can even go further to 10,000 or 9,000. High likely it will fill up the gap, all right, that I have been mentioning for years. Okay, so you can see, right, these are basically just an idea, okay, just an idea, just a concept to show us if the market goes up and it get rejected, that we're going to see a massive, okay, we're going to see a massive move down, guys. This is going to take everyone by surprise. So many of them who are going to come in now at this level and thinking that the Bitcoin is going to go to 100,000. You have to be very, very careful. All right, I always warn you. Now, if you even look, all right, if we look into the liquidation, now if you look into the liquidation, all right, now please look into the liquidation and tell me, is this exactly as how you are seeing over here? Now, all this target level is where the liquidations are. If you look into, right, can you look at it? So if the price goes up, I don't see much of the liquidity at the top. I don't see much of the liquidity at the top. The one that I have is about 200 over million. So most probably Bitcoin can go around 72, 73, you know, 75, or maybe around 80,000, and then we could see a massive dump because there are massive liquidity, right? Massive longs are basically waiting at the bottom here. Can you see that? So now if you look at the bottom here, right, it is exactly as what we are seeing here. If the price goes down, then the market makers are going to basically, a lot of these longs are going to get liquidated, right? A lot of these longs are going to get liquidated. So there are more liquidation at the bottom compared to at the top. Can you see that? Now if you look into, this is around what, 34,000. There are about 200 over million over there. And then we do have over here 28,000. So you can see that there are a lot of liquidation, okay, a lot of liquidation waiting at the bottom there. All right. So this is a very important insight that I thought that I want to share with the team, because I am not in the camp that the price is going to go parabolic. That what I really worry is that those who think that the price is going to go parabolic, most probably we are already hit the all-time high, which is before the halving. Now, some people argue and they say that no, this will play out exactly as the previous cycle, right? Now, please understand that there are difference between all the three previous cycles compared to currently, all right? Now, this cycle is unique. This cycle is completely different than the previous three cycle. Why? Because the previous three cycle, there are few things that we don't have. Number one, we don't have the institution, we don't have the retails. Sorry, we don't have the ETF. So this cycle is different. Okay, we don't previously, okay, there was no ETF, there was no institution, and the all-time high was hit after the halving. But this time around, the all-time high has already hit before the halving. Now, so this is completely different. So the market is completely playing a different game altogether. And now we have the institution. And please understand, now the retailers are basically holding it because they know that this is a store of value. But the institution or the smart money, they don't hold it, guys. They are basically a profit-centric. They are looking into profiting. They are not talking about holding it. most probably you may hear a few of these institutions like MicroStrategy and so on. They are saying that they're going to hold it forever. Come on, that is probably half truth, all right? Half truth, because no institution is going to hold these things forever. Everyone who is involved with this kind of asset, especially Bitcoin, is now correlated with the stock, and a lot of these Bitcoin are basically under the balance sheet of those companies. So if Bitcoin is in the balance sheet, then they have to sell it at one point in order to realize those profits. So can you see that it is a half-baked truth, and they are trying to portray this? Why? Because they are hyping it so that people will come in and buy and push the price, so that when they push the price, the institution or the smart money will start to sell it. Can you see that? And this is going to be the biggest disappointment. And personally, I think that this is how the smart money or the institution is manipulating the market. Alright, they are basically, seriously manipulating the market, and this is not good for Bitcoin. Alright, and this is not good for Bitcoin, and definitely Bitcoin has failed, its intrinsic value as a decentralized, because now as more and more institutions are into it, more and more smart money are into it, now it is no longer decentralized, right? It is now centralized, because the institutions, example, BlackRock, MicroStrategy, all these big institutions who are holding massive amount of Bitcoin in their balance sheet, they can basically move the market however they want. All right. So this is going to be a very, very significant insight. I hope, right? I hope that our community, able to decipher this information, able to watch this video, and able to digest, and even make sure go through the Wyckoff Wyckoff insight, and read and understand how does this theory practically aligning with the current situation of the market. I'm not claiming that this may play out, but I just have a different perspective, a different way to look into the market, from the Wyckoff theory itself. Right? So I trust that, alright, this information is helpful. If you have any comment, alright, please, put up there in the comment, under this video, right? And also please make sure that you like this video, and do share this video, to those that you think that they need to get this information and understand what is going on with the market, right? So this is going to be, I think the next cycle is going to be an exciting cycle. Those of you who are going to do a dollar cost averaging, most probably the next cycle will be a fantastic cycle. But also I believe that the next cycle is going to be a frustrating cycle, because people may not be able to really see an all-time high, but they're going to see, market can be dynamic, yet it can be very, very volatile, because of the institutions, right? So this is going to be probably a complete different cycle that we're going to see, coming into play, right? But the thing is that this is going to be exciting, and this is basically what Bitcoin is all about. All right, so I hope this insight is helpful. Have a fantastic day. God bless each and every one of you.